Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 6th of July. It's been a fairly flat week for markets net. There's a number of push-pull factors still in play. On the plus side, of course, we've got all the monetary and fiscal stimulus from central banks and governments around the world. We've also had another bumper non-farm payroll figure from the States, and retail sales are holding up fairly well. On top of that, in terms of China, the economy is showing some signs of some recovery, which augurs well for other developed economies. On the downside, of course, and against that, we are seeing some spikes in the US in particular of new COVID cases. We've got a second quarter half-year reporting season fairly imminent, a few trickling through next week, but it will get into a rather more busy time the week after, and that's likely to make for some ugly reading. Of course, that will also be effectively driving in the rear-view mirror, and investors are already showing some concerns about the third quarter numbers, let alone the second quarter numbers. Of course, in the UK, we've got our own issues in terms of GDP, housing, manufacturing, the services sector, and even Brexit starting to rear its head again. So in terms of that flat week, the general indices, the Dow Jones is down 9.5% in the year to date, the S&P down 3%, the Nasdaq continues its foray ahead, it's now up 14% in the year to date, and the FTSE 100 continues to be the laggard, down some 17%. Turning to next week, there's a few corporate numbers to keep an eye out for. Firstly, we've got JD Sports. This is obviously a FTSE 100 company which has had some success of late, particularly given its international expansion plans. Having said that, due to COVID, it's seen a lot of store closures, so it's been a pretty choppy ride for JD Sports. In the year to date, they're down 22%, but if you measure the share price from the March lows, they're actually up 48%. Similarly, we've got an update coming from Whitbread. This, of course, is basically now Premier Inn after they disposed of Costa last year, trying again to enter the German market as well, but needless to say, hotel occupancy has not been looking good, and the shares are down 44% in the year to date. Finally, in the house building sector, another sector which has been under the cosh due to COVID, we've got updates from Barratt Developments and Persimmon. Barratt's are down around 33% in the year to date, Persimmon down around 16%. Again, there has been some optimism since those March lows, with Barratt's having risen 38% since then, and Persimmon 50%. So obviously it'll be interesting to see over the last month or so whether there has been any pickup in house viewings and indeed house sales. Thank you for watching. Have a great week.